Hey everyone, Meet Kevin here. In this video, I'm going to talk about what you need to retire early, how fast you can retire, and we'll do that starting with just $100. I'll also introduce a brand new rule to you. Quick note though, many of you might not know this yet, but I've been holding small voice-only chats with many of you, and a lot of you have been loving them. If you'd like to join those voice-only group chats where I can help sort of mentor you with any questions that you have about business or money or finance or whatever, I encourage you to check out the links to the programs down below. You'll find the link to the voice chats right next to the link for life insurance, which you can sign up for in as little as 5 minutes, and 2 free stocks with Webull, as long as you deposit just $100. Okay, let's get started. The easiest way to determine how to retire is to determine how much money we need to retire. Think of it kind of like making a goal. So I want you to ask yourself, how much monthly income, not considering taxes, do you need to retire? We'll worry about taxes and all that stuff later. For now, I just want you to ask yourself, hey, based on what I'm making today, can I retire with $3,000 per month? Can I retire with $5,000 per month? Or do I need $10,000 per month? Maybe I want $10,000 or $12,000 or $15,000 per month because I want to live gildedly. Whatever the monthly amount is that you desire, I just want you to take that number and multiply it by 200. And that's it. So that is the amount of wealth that you need to create in order to retire. Now, this video is of course for entertainment purposes only, so always consult a professional who knows your personal situation better than I do, but this video might help you get started, so let's try it together. Let's go with $5,000 a month. $5,000 times 200 is $1 million. Okay, so we need $1 million of wealth to be able to retire. Now, multiply that $1 million by 6%. That's what I'm using as our rate of return on our invested money. Well, that's going to give you $60,000 of annual income. Divide that by 12, and you get $5,000 per month. And there you go. The rule of 200 tells you exactly how much wealth you need to be able to retire so that when invested, and as long as you're investing at 6%, you don't have to work anymore. Now, I know you might be asking questions like, wait a minute, Kevin, wait a minute. Where am I gonna get a 6% rate of return? And the reality is that options exist if you search for them. And if you're more comfortable using a different percentage, you can manipulate these numbers however you'd like. You take the monthly number, divide it by the percentage, and then multiply it by 12. That should help you accomplish your own sort of metric for retirement, although the rule of 200 tends to work, at least right now. Look, for example, at AT&T stock. AT&T stock will pay you 7% as a dividend. So if you invest $1 million with AT&T, they will pay you $70,000 per year for doing nothing. That's making money while you sleep, literally doing nothing. No tenants, no toilets, no property managers, nothing. But unfortunately, this is the part where most of us get stuck. It's not realizing that there are 2 parts or sort of 2 phases of life. And that's okay because schools don't teach us this. See, there's a building part or a building phase of life, and then there's an enjoyment phase of life. Once you reach your goal target, that target that you're writing down on a Post-it note, hopefully, that wealth target, once you reach that wealth target, you can decide to stay in the building phase if you want, or you could choose to retire at any point. The choice becomes totally yours. And once you retire, you shift to the enjoyment phase and basically the retirement phase. Unfortunately, because we aren't taught these 2 parts, we usually never realize that there is a point in our lives where we do have the option of retiring as long as we were on the right path and we were actually building. Instead, most of us, we go to our jobs, we try to save some money, we try to stay out of debt when we can, but crap happens. And then, maybe we can get some miscellaneous cash flow coming in, but for some reason, we never seem to get closer to retiring. Why? Because we don't realize that there's a point that we're trying to work towards. And by not realizing that point, and again, it's not your fault, it's schools that don't teach us this, we never really accomplish it. So let me ask you this. Let's go a different way, and then we'll get into some more of the nitty-gritty here. What's your net worth today? Your net worth is all of your assets minus your debts, right? Let's say it's $20,000. Maybe it's $50,000. Well, multiply that by 6% and divide it by 12. That is, if you took all of your net worth and invested it today, how much money would you make per month? Well, if you had a $50,000 net worth times 6% divided by 12, that would give you $250 per month. Yay, $250 a month of cash flow. But guess what? You can't retire. Instead, you're getting $250 per month, and while you're programmed to say things like, well, don't worry, Kevin, I'm gonna reinvest this $250 per month, The reality is, most of us don't. So instead of focusing on where can I get the next $50 a month of cash flow? Where can I get the next $100 a month of cash flow? And then aimlessly trying to go through life without that target in mind, write the target. And your goal becomes a wealth target. I recommend you put it on a sticky note and put it somewhere you're gonna see it every day. Put it above your toothbrush. And then every single day, ask yourself, what did I do today to build my wealth? Are the actions and the decisions that I made today, if you brush your teeth at night, or yesterday, if you brush your teeth in the morning, in line with me building my wealth? And if not, what can I do to change that? So do this right now. Write down the monthly income amount, ignore the taxes on a piece of paper, and we'll talk about taxes later. Multiply that by 200, and then the result you get, put it on a Post-it note and stick it somewhere. Now, notice we're not talking about building our cash flow during the building phase. We're gonna have cash flow in the retirement phase. But wait, I just said, don't worry about cash flow, and I know I might lose some of you, so let me explain that. Let's clean the slate for a second, remove all thoughts that we have about cash flow and passive income and all of that, and ask yourself this. When you're not retired, do you need passive income to survive? That is, when you're working anyway, do you really need the passive income to survive? And the answer is probably not. And in that case, you should probably focus on your wealth. But what usually happens when we get cash flow? Well, there are two problems that happen with cash flow. One is when we get cash flow and we're still working, most of us kind of see that as bonus-free money. We're not really thinking of it as our retirement money that is coming into our checking account. So we get like $50 or $200 maybe a month of cash flow, and it's like, sweet, some spending money. I'm gonna buy myself, some new shoes. I'm gonna buy myself a dinner. We're gonna reward ourselves for working hard. Or you know what? How many of you have heard this phrase? I only let my passive income pay for all the fun stuff that I want. So that way my passive income is paying for my car and my toys and my vacation and all that kind of stuff. Like, look, that's great, that's cool, but for most people, that just means they're robbing themselves of their retirement. So frequently we create cash flow, and then at the same time, we also create more expenses. So we're increasing our standard of living the more cash flow we get. That's totally the opposite of cash flow. Most of us who are getting cash flow now, we're supposed to reinvest this so that we can keep growing our portfolio, right? But instead we tend to trick ourselves into spending more money. This is dangerous, but it's not the only dangerous thing. Like, let's say you were disciplined, and let's say you're like, Kevin, that is not a problem for me. Fear is not a factor for me. I will not use that cash flow. I will reinvest all my cash flow. In fact, I turned on automatic dividend reinvesting with my stock trading platforms like Robinhood or whatever. Well, cool. But what also happens while you're working and you receive cash flow? Well, it's the second problem. When you're working, and let's say you make your first $50,000 a year at your job, cool, that goes through the tax brackets and you get taxed. But then you make extra money, you make extra cash flow. That gets tacked on to the end, and it usually gets taxed at your highest personal income tax rate, with the exception of certain investments like some dividends, but usually shorter term dividends still get taxed a lot higher than long-term capital gains. Don't worry so much about that right now. Just know that if you make money, and then you make cash flow on top of that, your cash flow usually gets taxed at a high rate. And let's say that rate's somewhere around 35%. But you're saving for retirement, right? You've written down your goal, you're saving for retirement, you're getting a bunch of cash flow. So you get $100 of extra cash flow, and you're disciplined and you're going to reinvest it. But wait, you received the $100, but because you received it, you have to give $35 to the government in taxes. Now you're only left with $65 to reinvest. So you actually just made it even harder for you to get to your wealth figure. You're better off telling that dividend company during the building phase of life, keep the dreaded dividend, just make the company more valuable because that's going to increase my net worth faster and it's going to prevent me from having to pay taxes now. I don't want to pay taxes now. We'll figure out how to deal with taxes later. And we'll talk about taxes later in this video. But instead, now I want you to focus on how can you focus on retirement and building wealth? Because when you're building your wealth, your goal is not to pay taxes on that wealth. For example, let's say you put money into Tesla stock at $750 and then it doubled to $1,500. You're not paying taxes on that gain. Your wealth just went up and you're not paying taxes on that gain. Again, we'll talk about taxes later. When you buy real estate, below market value. You're not paying taxes on that increase in net worth. People ask me all the time, Kevin, should I invest in real estate for cash flow or should I invest in real estate for my net worth? And it depends. And you should know, watching this video, what does it depend on? It depends on what phase of life you're in. If you're in the building phase of life, you invest for wealth. If you're getting started, you invest for wealth, not cash flow, because cash flow is going to get eaten away with taxes and mismanagement and the likelihood that you're going to feel wealthier. And when you feel wealthier, you increase your spending and you increase your standard of living. Okay, now, when do you go for real estate cash flow and stock cash flow? Retirement phase. So let's talk about starting. When it comes to starting with $100, what should you do? I mean, after all, let's be real. We're not going to retire on $100, right? But we can use this $100 to get us started. Because even if you're starting slowly, you're a step ahead of everybody else who isn't starting. And life isn't a game of relativity. Life is a game of not comparing yourself to others, even though that happens. Life is a game of trying to figure out how you can get to that point. You build, boom, ding, you hit the red bell. Oh yeah, enjoyment phase, right? That's the goal. And so the first thing you should do with your first $100, well, if you haven't done this yet, you should really do this, is number one, write on a Post-it note the wealth amount you need. That's not gonna cost you a lot from your $99 or $100. I mean, even if it costs you $1, you'll have a $99 left, right? So write that number on a Post-it note, really, like, I know that sounds crazy. It's like, seriously, is this just like some motivation video? We're gonna talk details here in just a moment as well. More than what we already have, but writing that number down, whether you believe in like The Secret or whatever, looking at that number every single day and asking yourself, am I on track, is going to help you make it happen. Now, number two, I want you to take your first leftover $100, whatever you have, you know, maybe it's $99.50 because you had to buy a Post-it note, and invest it into something that is going to build your wealth. Okay, that's the only rule. Build your wealth, not cash flow, wealth. Okay, how do you build your wealth? Well, there are a few different ways you can do that. You can invest $100 into your education, because your education into maybe becoming a certified financial planner or a real estate agent or a licensed contractor instead of a handyman or a loan officer, or maybe you're gonna go to a coding boot camp. These are things that are going to increase your capacity for making more money, which making more money is going to enable you to build your wealth faster because you're going to have more money to invest. Grind now, play later, right? So education's a good one. You could also buy your first stocks if you haven't yet. You could go to, for example, M1 Finance. You could look at the little portfolio I put together the other day. Go to meetkevin.com/1337. Look at the top stocks there and pick some of the quality ones, or invest in that pie of 46 stocks. Put that $100 to work. If you don't believe in the stock market, try it. It's $100. Put it in. See what happens. Get your feet wet. Or maybe that $100 is gonna go towards paying off your credit card debt so you can finally, and again, maybe not paying off everything, but you're starting on that path, so that you can finally start qualifying to buy your first home and actually building wealth. Remember, the net worth of tenants is on average $5,600. The net worth of homeowners on average is $196,000. Why is that? Well, it's because homeowners own assets. And so you gotta get on that train of building wealth. And so, what's the absolute fastest possible way to build your wealth? Like, let's say you got a job, you got most of your debt paid off, and you know, now what? Like, how do I build my wealth? Like, you feel like you're paycheck to paycheck, but you can save a little bit. How do you build your wealth? The easiest way to build your wealth in America is taking advantage of the fact that you can buy a house for 5% down or as low as 3% down. And you're looking for $80,000 golden tickets. And that means every time you go buy a house and you go move into it and live it, you do some paint and carpet and a little bit of fixing up, your net worth went up $80,000 more because you bought a property that was maybe a little stinky and needed a little bit of work and cleaning up. You were willing to put that grind and that effort in. It's not that big of a deal if you think about it. Paint and carpet. Any of y'all watching this video can do paint and carpet. And every time you buy real estate, you make it gold of instantly seeing your net worth go up by $80,000 because you're buying real estate below market value. I'm not asking you to focus on cash flow right now. I'm asking you to focus on wealth. Because remember, wealth building phase, hit the red bell, boom, go to cash flow, all right? So if you have a goal of $5,000 per month of cash flow when you retire, that's $1 million of net worth. And if you're serious about creating $1 million net worth becoming a millionaire, one of the easiest and fastest ways to do it is by buying real estate. I did it in under 7 years before YouTube, before I had a single subscriber on YouTube. Okay, that's not true. I had like 13 subscribers on YouTube for like the first 7 years of my career, okay? But anyway, I did it in 7 years before I had any even dollar of income coming in from YouTube. And I became a millionaire by working hard and grinding hard, but taking all of the excess money that I had and plowing it into real estate and stocks. That's how I did it. I focused on building my wealth first. You can see the story of my net worth in the link down below. You can see that before YouTube, I went from like no net worth, a few $1,000s, to a net worth of over $2.5 million. That's before YouTube. Because I see the cynical comments like, oh, Kevin, sure, it's easy for somebody making YouTube videos and getting, thousands of views to make it and do it. Well, how would you do it without that? Well, I did do it without that. And so for most of us, if you write down a goal of, let's say, $1 million, or maybe you write down and say, you know what, I could do it with less. I'm gonna write down a goal of getting to a net worth of $750,000. Most of us can achieve this within 10 years by leveraging our jobs and safely buying below market value real estate that is going to increase your net worth. That would give you what you're looking for. And remember, there are plenty of opportunities to figure out where to invest your money to get that 7% dividend or the 6% dividend or the 5% dividend, whatever you feel comfortable with. But you have to get wealth first. Like, why are we gonna make a video talking about all the ways you can get passive income when in reality that's talking to people who already have a net worth, right? Realistically, we should be talking about that when you have a net worth of $250,000, $500,000, $1 million. But we gotta get that net worth first. And that's what this video is about. So far, if you've liked this video, we're gonna talk about taxes here, but if you've liked this video so far, could I ask you to share it with somebody that you care about? I think this video could have a really big impact on your friends and family, and I'd love it if I could ask you to share this video with them. Now, how do you prevent paying taxes? Well, this gets a little bit more complicated, and obviously you should always consult your CPA and your professionals, but I'm gonna give you some quick ideas here. The United States wants you to invest, and because they want you to invest, they also reward you by helping you prevent paying taxes. And you learn more of the tricks of the trade, again, when you have wealth. Like when you hit the bell, and then you look around and like, all right, let's figure this out. Then you have options. You have options, like the doors open up when you have money. It's hard to open doors if you don't have money yet, so you start on the building phase. That's the whole point of this video. But let's quickly talk about the tax thing, just to make sure we got some of your motivation properly aligned. Well, number one, if you own real estate, you can 1031 exchange your real estate into cash flowing opportunities. So you can take your wealth building assets and turn them into cash flowing opportunities in the future. It's more complicated, we'll talk about that later, but that allows you to buy and sell real estate without paying any taxes on the amount of money that you've built. Crazy. Anyway, number two, this is what a lot of people do. Once you're ready to hit that bell, like after your earning years or whatever, and you built a lot of wealth or whatever, you're ready to retire, or you wanna go travel the world or whatever, you know what a lot of people do? They move to a low or no income tax state, and then they sell their high quality stocks and they move them over to dividend stocks. Think about it, I'm in California. I made a lot of money on Tesla stocks, but if I sold my Tesla stock, I would have to pay somewhere around 50% in taxes. That sucks. Now, if I held it long term, I'd probably be paying somewhere in California around 35% in taxes. That also sucks. But if I hit the bell, retired, moved to Nevada, I lived there for a few years, established my residency there, and then I slowly started selling off my Tesla stock, I would only be paying 15% in taxes. Tax law can always change, so again, run this by your CPA, but I'd only be paying 15%. So now it's easy. Now it's easy to move my wealth over to the dividend ones. Real estate allows you to exchange to where you pay 0 in taxes. Stocks, they're gonna get you, all right? but 15% is not that bad. So there are many tricks, but for now I want you to focus on building wealth. If I can do it, you can do it, I believe in you. But there are a few warnings that I wanna give you. Actually, there's really one major warning that I wanna give you. But first, I do wanna mention this. If you like this video, make sure to check out the money and finance course down below. It teaches you all about the psychology of building wealth through investing. And it teaches you about money even if you know nothing about money. If you don't know anything about stocks, if you don't know anything about real estate, it gets you started. Now, it's like 88% complete, so there's still courses and lectures that I'm working on. In fact, what I'm going to do is I'm going to incorporate this video into the money course with a preface and an ending. And the preface and ending is going to be additional content that would make this video too long for YouTube, but will give you extra additional and very useful insight. So check out that program down below, and if you're in the money course, check out that lecture. It'll be posted by the time this video is posted on YouTube. Now, what I want you to remember, and always remember this, is do not let cash flow manipulate you. Cash flow is like the succubus that comes in and looks beautiful and sucks you in with their beauty, and then they're a succubus. It's a bad thing. I don't know if you played World of Warcraft. In World of Warcraft, they kill you, okay? In your sleep. Anyway, you don't wanna let that cash flow suck you in and manipulate you, because then the odds are you're going to spend your way out of ever being able to retire. So keep these things in mind. Follow the steps in this video, and folks, I cannot wait to see you in the next video.